the integrity and professionalism of this competition. With that, let's move forward. Before we proceed with the team presentations, I would like to introduce our distinguished panel of judges, seasoned professionals from the finance and investment industry who will be evaluating today's competition. We have Mr. Saeed Akbar Ali, EVP Head of Capital Market and Investor Relations. We have Mr. Raza Jaffrey, Head of Equities Intermarket Securities. We have Ms. Imreen Surani, Head of Research at Al Mizan Investment Management Limited, and Mr. Nayab Babar, Chief Investment Officer, Ministry of Information Technology and Telecommunication, Pakistan. We are truly honored to have such an esteemed panel with us today, and we thank them for their time and expertise in evaluating our participants. And now, let's move on to the highlight of today's event, the team presentations. Each team has worked tirelessly to prepare and will now showcase their research and investment recommendations. Our esteemed panel of judges will evaluate them based on the depth of research, analytical rigor, and the clarity of their investment thesis. To begin, let's welcome our first team, Team Can Do Crew. This team has demonstrated exceptional dedication in their research, and we are eager to hear their insights. Can Do Crew, the stage is yours.
Assalamu alaikum everyone. We are initiating a buy stance on Systems Limited using a blended approach with a target price of PKR 755 per share, implying a 31% upside. This valuation incorporates both DCF and PE methodologies. The key factors that drive the recommendation are attractive valuation, outpacing global peers through dynamic ME expansion, USD revenue per employee continues to grow, gross margins converging to global levels, and ultimate beneficiary of PKR USD devaluation. Now moving towards the competitive positioning. Systems has always been a compounder historically. The bonus adjusted price return of SIS since 2018 is 898% versus KSE 100 index that stands at 180% since 2018. Moving towards the introduction of the company, Systems is a leading Pakistani IT solutions provider established in 1977, having over 8,500 employees. It provides a comprehensive range of services to global clients, including Fortune 500 companies. Since its IPO in 2015, System has seen significant business growth driven by strong organic expansion. Its strong client focus is evident in its long-term partnerships, with 93% of its clients contributing to recurring revenue and top customers maintaining a partnership for over 5 years. The main leading segment of Systems Limited is software implementation. It mainly provides its services in the cloud computing and cybersecurity sector. Along with that, SIS operates in 4 main regions, including MEA, North America, Europe, and Asia Pacific. Now moving towards the industry overview. Cloud computing and cybersecurity are the 2 most critical pillars of the digital era. Cloud computing enables businesses to access computing resources over the internet, categorized into infrastructure as a service, platform as a service, and software as a service. Systems, however, only operates on SaaS, offering cost effectiveness, scalability, and innovation. Major key players of cloud computing include Microsoft Azure and AWS. Cybersecurity, on the other hand, protects these cloud services from cyber threats like phishing, ransomware, and data breaches. An example of cloud computing and cybersecurity is of mobile banking apps and the usage of OTPs. Global cloud computing market is valued at $1,500 billion as of 2024, which is growing at a CAGR of 8%. As we can see in the graph, North America leads, which is due to its strong business economy, followed by Asia Pacific, which is driven by infrastructure investments and financial sector growth. Middle East, which is relatively a smaller market, but is also expanding rapidly due to banking sector growth and economic diversification. In the GCC, online banking transactions have been increasing rapidly, which reflect the rise in capital markets, financial investments, and economic diversification. However, this increase in online banking transaction will also create a demand for the cybersecurity industry. Now my teammate will brief you about the financials.
Now let's take a look at the financial aspect of this company. Systems has demonstrated superior dollarized revenue growth as compared to its competitors. This outperformance suggests that the company is effectively capitalizing on favorable market conditions. Systems' 7-year CAGR is much higher than its competitors, except for EPAM, which has depicted the same growth. This outperformance was further catalyzed by the strategic acquisition of Temenos Country Model Bank, which is a globally recognized banking software solution. This acquisition has helped Systems in expanding its key offerings to high-end banks in the GCC region, increasing revenues. With easing US CPI from the first quarter of CY23 to the first quarter of CY25, this will lead to the increase in purchasing power of consumers, which leads to retail and CPG sectors expansion in their businesses, due to which they will increase their IT spending. This leads to an increase in the boost of revenues in the North American region. The retail revenue grows from 22% in CY25 to 25% in CY26. Recent years have witnessed a decline in GMs, particularly because of rapid geographic expansion and issues in talent retention. However, with the easing CPI of Pakistan, we believe that these challenges should subside, which will lead to improved employee morale and retention. We forecast a gradual recovery in GMs in CY25, which will be at its peak in 2030, as Saudi Vision initiatives bring growth in the EMEA region. While 90% of Systems revenue is dollarized, we believe that the company is in a stronger position in terms of PKR USD devaluation. While the currency rate remains stable right now, any further devaluation will lead to increased exchange gains. While the North American market remains the largest, EMEA market is still the key revenue driver for Systems. The overall EMEA market is expected to grow at a CAGR of 9% in the upcoming 5 years, with major growth coming on the back of Saudi Vision 2030. While the overall market size of Middle East remains small, the overall CAGR of Middle East is still in line with all the other regions. Lastly, Systems revenue per employee is Systems has demonstrated superior revenues per employee, as they have achieved a 9% CAGR in the past 8 years, due to which outpacing most of the global technological giants, except for EPAM. Systems revenue per employee is around $26,000, which is quite significantly less than all of the other competitors who have $45,000 and above, which means that Systems has a strong growing potential for the company.
Now let's talk about the valuation aspect of System Limited. We have used 2 different methodologies. The one is DCF model and the other is PE valuation model. We have calculated a DCF valuation of 851 PKR with the help of the risk-free rate 12.1% with a beta of 1.13 and the risk premium of 6%. We have used FCFF approach in the DCF model, which shows us the cash flow available to its all investors, including both equity holder and debt holder. While in the PE valuation, we have taken a long-term PE multiple of 16.3x with the EPS of 40.31, which give up the valuation of 657. These 2 valuation give up the blended approach of 755 with a 31% upside. Now, so let's talk about the sensitivity analysis. On the left hand, we can see EPS and valuation sensitivity. We have taken a base case of 292 PKR to USD, which with the EPS of 40.31, which give up the valuation of 755 PKR. But if we see if there is a decline in the cases, there will be a higher valuation as well as a lower valuation respectively. While if we talk about the graph on the left hand side, the USD revenue growth rate and the GM sensitivity, we can predict the value 755 with the help of 27% gross margin and the growth rate of 17%. But if there is an increase in gross margin rate as well as a revenue growth rate, we will have a higher valuation. But if there is a decline in the gross margin as well as the revenue growth rate, we will have a lower valuation. Let's talk about the bull case and the bear case. In the base case, we have calculated the value of 755 with the help of 17% growth rate with a gross margin of 27%. But in the bull case, we have valued the share around 940 PKR with an increase in the growth rate of 20% with a gross margin of 31%. While in the bear case, we have taken the share price around 620 with the decrease in the gross margin as well as with the same revenue growth rate.
So I'll be highlighting how system is not only following the ESG trends, but also making them a part of its DNA. Starting with the environment, if I talk about paper consumption, it saw a 31% year-over-year drop, with digitalization cutting the cost from 5,100 to PKR 3,500 approximately. Moving on, if I talk about the social impact, because a company is as strong as its people, female senior management saw a 56% surge as the numbers increased from 16 to 25 by 2023, reinforcing system's commitment to diversity. Now, if I talk about workplace security, system has it covered due to its safety drills, security measures, which ensures safe and sound environment. In addition to which, the insurance coverage has skyrocketed to 400,000 as of 2023. Now, if I talk about employee growth, system is not holding back, as the investments has been tripled to 115 million as of 2023. Finally, if I talk about governance, strong leadership means long-term success. System has a well-balanced 7-member board, which also includes 2 female independent directors, ensuring its transparency and inclusivity. Lastly, if I talk about the data security, they are ISO 27000 certified and compliant with NIST technology, ensuring robust cybersecurity and stakeholder trust.
Now I will be highlighting the factors indicating the key investment risk to thesis, such as the factors imposition of a normal tax regime, increasing in geopolitical risk, talent retention, decline in gross margins, and USD PKR appreciation. Moving forward, we have calculated a sensitivity of 1% increase in risk with the higher probability of USD PKR appreciation, with the negative impact on EPS of 2% and the negative impact on valuation of 1%. Increase in geopolitical risk indicates a medium probability with the negative impact on both EPS and valuation of 6%. Likewise, decline in gross margin indicates a medium probability with the negative impact of both EPS and valuation of 8%. The last factor includes imposition of normal tax regime, which shows a low probability but the higher impact on IT sectors, with the negative impact of EPS of 35% and the negative impact on valuation of 34%. Lastly, growth on bank, we have the best to come. Thank you.
Okay, team, thank you for the presentation. My question is on valuations. I think you mentioned that you're valuing systems on a blended approach. When it comes to PE, it's 16.3. Where are you getting this 16.3 from? Is it derived from global peers? And if it is, then do you think that because Systems is a Pakistani company, it should have some sort of valuation discount to global peers or not?
Sir, the value we have derived 16.3 is the long-term median from 2015 to 2023. So we have get the value around 16.3. While if we talk about the current value in 2005, system has a 14.4 multiples, and in 2026 it will be around 10.3. It is below 16.3% because the stock is being undervalued and it's like a seem an attractive investment to the investor.
And what are global peers trading at? What's there? You mentioned that there's several companies you showed that a comparison with. So what are those companies trading at on average? Do you recall?
Sir, the values we have taken for the global peers as well. Every tech giants have a higher multiple. So the value of other multiple may be higher than 16 or 18%, and some companies have higher value around 20 or 28.
Okay, thank you.
Assalamu alaikum. So I just want to understand from a business perspective, you talked about the Middle East and Asia region being as the core market for systems. I want to, number one, understand, did you look at any competitors that were operating in those regions? And number two, because you have a buy rating, From a business standpoint, what do you understand that systems is doing really well, that that the forecasts show that the revenues and the profitability is going to increase?
Sir, the IT technological giants are mostly based in North America, due to which systems outperforms in Middle East, Asia, Africa region. There are no competitors in that region, firstly. Secondly, how systems excels over there. Systems जो majorly जो वो जिस पास पे काम करते हैं वो that is cloud computing and cyber security, first thing. Secondly, the strategic acquisition of Temenos Country Model Bank, due to, and this is the only license, systems has the only license of Temenos Country Model Bank, so systems outperforms over there.
Assalamualaikum. Can you come to your financial analysis slide, please? Okay, it's all right. So we see in the table that in the systems USD revenue per employee, so compared to peers, until 2017, systems USD revenue per employee was higher than one peer, and then it started reducing. And now it has a bigger gap compared to peers that you rightly pointed out. So have you analyzed the reason of this reduction and the big gap now compared to where it was in 2017?
When talking about the reduction could be possibly because of more employee hirings, due to which the revenue was not coming up to the mark, because when you have trained employees, in the first 8 to 9 months, you do not expect revenue from them. So once they had trained them, then revenues started to increase. Secondly, in 2022, in the years 2021, 2022, it has started to increase. The basic reason was that the systems in Pakistan, COVID-19 was not prolonged. It was around 3 to 4 months. However, in the IT sector, in the Indian technology sectors, those companies faced a longer COVID-19 period, due to which systems excelled over there in these years.
Another question. In your valuation slide, you have a bear case of 23% gross margins. Could you tell me the average gross margins for the last few years for the company?
For the system was 20%.
Okay. So any particular reason that you're taking a higher gross margin compared to the last few years as your bear case?
Ma'am, the reason for taking these gross margin higher, as we have predicted by recommendation, in recent, as I mentioned before, the system stock has been undervalued. It has a huge potential in the upcoming years as well in the MEA region plus and other regions. So we have taken a high gross margin because of that. Also, system will likely to generate more revenue because their main source of income is USD dollar. So any appreciation in the PKR, any depreciation in the PKR will give them higher gross margin and higher profits.
Thank you.
Okay, thank you for the presentation, guys. If you can just come to the valuation slide, which has got the earnings growth and all of that, the initial one, no, the earlier one. I think slide number probably second. Yeah. Okay, so as you just answered this thing in terms of, you know, the currency impact, and you've talked about a lot on the currency impact on their earnings. Can you shed some light on the extraordinary growth that you guys are projecting in 25 and 26? Specifically incorporating, you know, generally when I look at the sensitivity analysis, we have not incorporated a major depreciation in Pak rupee, right? So what are the major drivers behind 55% growth in 2025?
So the major drivers were because, as we know, systems has doing their business in cybersecurity and cloud computing. So in जो आजकल के जो दौर है, the companies are wanting cybersecurity as well as cloud computing services. So there was the reason why systems increases because as we see the KC index graph, mostly companies around gain around a 1% appreciation in the last few years. But because systems gain around the value high percentage of 898 because it expand around in 2020 in MEA region as well as other regions. So this was the reason why systems graph was
But
high.
you're mixing up apples to oranges. I'm asking in terms of the earnings growth. Now, if we see if they are doing extraordinary in terms of the cybersecurity and these areas, if you look at 2023 and 2024 earnings, has there been a one-offs there that earnings are not showing the true potential? Why the earnings are growing very rapidly in 25 and 26?
Before, because systems are likely hire employees back in 2021 and 2022, they are training them. But once those employees get to the work, they will generate more profit and gross margin. So that's the reason why system will get a higher profit margins in the upcoming years.
Fair point. Okay. And the next question is related to the employee cost. One of you mentioned in terms of the employee impact that the inflation in Pakistan is actually on the lower end this year, and hence it's going to control the cost side of things, right? Which has been the major market in terms of the growth in the last couple of years? Is it just Pakistan only that the hiring has been done, or some of the Middle Eastern region? If you can just shed some light on that.
Region where system has been making a good progress is the MEA region from the 2020, because MEA market has been recently succeed in the terms of like these cybersecurity service. As my teammate mentioned, system has only the Temenos license over there, which make them a great key player over there and making a larger key market player. So this was the reason. This is a main part. This is a region where system is making progress, as well as in the North America region.
Okay, thank you. I just want to sort of follow up on this. Okay, so as you explained well in terms of the Middle Eastern region, so the hiring or the growth in terms of the employee has been in that region or in Pakistan?
Widely hiring employee all over the region. They are mostly system has a nature of like remote work as well as some on-site workers. So they are hiring people all over the region, especially in MEA region. They are recently been reached their market, and like they are taking a big market share over there. So the likely wise of hiring is in MEA is more than Pakistan.
So then how will Pakistan inflation will have an impact on this cost if the hiring has been done in Middle Eastern region?
So sir, if we talk about the inflation rate, it's around 12%. But as we know, the inflation rate has been like in over control in the past 1 year, and we have seen a lot of like अगर बात करें अपने youth की, they are thinking of going abroad and then making a great money over there. But if we talk about in Pakistan, system has like giving opportunity as Pakistan's economy is being stable, so there are likely high opportunities for the youth to excel over here.
Okay, thank you.
Thank you. Thank you. Hello. Thank you, Team Can Do crew, for that well-prepared and insightful presentation. Let's give them a round of applause. Up next, we have another exciting team. Now please welcome rising Fintellects with their keen analytical skills and thorough research. This team is ready to present their findings. Over to Team Rising Fintellects. While the next team is getting ready, judges can compile their scores.
Good evening, everybody. We're here today to present a research proposal for Systems Limited. We present a buy recommendation with a 29% upside and a target price of 704 rupees in the next few months, in the next 10 months. Okay, so in the last 3 quarters, Systems has reported a very favorable financial performance with a gross margin of around 23.8%. Why we recommend Systems Limited specifically is because of their strategic expansion in high growth regions and the fact that they really hedge themselves against the currency risk by spending in Pakistani rupees, spending their costs in Pakistani rupees and earning majority of their revenues from abroad. Next, a very key aspect of why we recommend Systems is also because of the fact that the Pakistani IT sector is really going towards stability now with a compound annual growth rate of around 16.8%. Systems operates in 16 major countries, the major regions being Middle East and Africa at about 55%, Asia Pacific and Europe at about 26%, and Pakistan at about 16%. Okay, so the main services that Systems Limited provides are communication services, software and development services, cyber security, and cloud compounding. We also came down to a very healthy revenue compound annual growth rate based on the historical data of about 48%, and that's why we recommend Systems Limited to be the next investment. Now we'll move on to
of its top line growth. Now, however, in 2024, PKR actually appreciated by 1%, while wage inflation and the consumer price index stayed high. This led to a compression of margins at the gross level and also at the net margin level because of a reduction in exchange gains. In addition, impairment of some unsuccessful acquisitions of systems in 2023 and 2024 is also going to be hitting margins. Moving forward, we're going to be contextualizing our buy call using our investment thesis. So first of all, strategic expansion in high growth areas like MENA and APAC is going to be leveraging growth. So Systems generates most of it, like more than 55% of its revenues currently through the MENA region. And MENA has been at the forefront of IT growth globally, mainly because of the Saudi Vision 2030 and the Saudi World Cup 2034. As a result of that, we ended up at a healthy CAGR of 30% from the MENA region. And similarly, APAC has been a new market for Systems, having entered into in 2022. So as the company normalizes its market share in that region, we arrived at a healthy CAGR of 30% for the APAC region as well. Secondly, we're going to highlight the healthy cash flows of Systems, which is going to enable it to pursue inorganic growth by making acquisitions. Especially the 2024 SBP regulation now effectively allows Systems to retain 50% of its export revenues abroad. So this is going to allow it further to make foreign acquisitions as well. And its Altman Z-score is around 7.29 as per Bloomberg, which further emphasizes good financial health for the company.
Good evening, my name is Hasan Arshad, and moving on, we will be analyzing Systems on its ESG front. We use Bloomberg ESG score as a metric as a proxy to analyze Systems ESG performance with its regional competitors operating in a similar segment. Systems with an ESG score of 1.96 falls short of a median score of 2.6 of the median score of its regional competitors. Breaking it down further, an environmental score of 1.01 and a governance score of 4.08 is something that makes Systems fall short of its regional peers. However, a social score of 1.40 is something that makes Systems stand out of its regional peers. Moving on each front, we did a twofold analysis. We identified Systems existing majors in place and their impact, and we room for further improvement. With environmental majors, Systems has been promoting more paperless operation, moving more towards the cloud storage systems, moving more hybrid working model, aligning with the global best practices, and UN's SDG 3, 7, and 12. However, when it comes to greenhouse gas emission, according to Bloomberg's estimate, it is standing around 6.64 metric tons, which is something that Systems may need to consider in order to align with global best practices and UN's SDG 13. Moving on to the social front, it is something that Systems excels at with its workforce development, which is our global IT Mustaqbal training program, a comprehensive 6-month training program which addresses the IT skill gap issue and brain drain situation currently in Pakistan. Designed for masses, coming only at a cost of 5,000 rupees, is something that allows the people to specialize in DevOps, business operation, and cloud servicing. Alongside that, an HRCC approved training calendar and health and employment insurance benefits to its employees, as well as global cybersecurity certifications, is also something that underlines systems commitment to quality and safety. Moreover, there is something on social front that system may need to address when it comes to its workforce diversity, with around 14% of the current workforce being women, is something that systems may need to address in future. Moving on to the governance front, systems board composition as of now is 85.7414% of the board comprising of the non-executive directors, and 57.14% of the directors are independent. With over 100% of the members in audit committee being independent directors, is something that highlights systems commitment to fair accountability and objectivity. However, when it comes to the aligning with themselves with the local laws, they are fully aligned with all the local and international laws. However, when someone looks at the exponential increase in executive compensation, that may raise a concern, but this is fairly in line with systems over 7-fold increase in revenue over these years, and systems commitment to compensate and retain top talent within the country. Finally, ASFP's 12-year leadership provides system a bit of stability, which is very much healthy for a tech company, aligning with the global best practices of Microsoft, Tesla, and etc. And however, this is something that may need to be kept with robust check and balances, because this could also prove a double-edged sword. Moving on, Sufyan will take over with the valuation.
Now let's dive into the valuation. Our DCF price target is 703, which offers 28% upside potential based on closing price as of 21st February, which was 547.23. Our cost of equity 16.7%, which is based on the following assumptions: risk-free rate of 12.2%, which is 10-year PIB yield as of 21 February, beta of 0.9, which is 3-year average sold from the Bloomberg, market rate of 16.6, which is around 20-year average, equity risk premium, which is historical average difference between the market return and the PIB yield. Moreover, our terminal growth rate is 5%, which we have considered after considering the long-term GDP projections of IMF, as well as in technology sector, which is highly growth-driven. Moreover, we have used FCFE rather than free cash flow to the firms in our DCF valuation model due to the absence of long-term debt in the capital structure and for the equity focus for our investors. We have also performed relative valuation, where we find systems to trade in line with average PE multiple based on its local players, but we have assigned only 10% weightage. We believe none of these companies have a similar competitive moat like systems, and there is no direct competitor for systems. Systems outshine them in terms of their scale, profitability, diverse offering, and more importantly, market cap. We have also performed relative valuation based on global players, where we found systems to be trading at below average, but we didn't assign any weight to it, as these companies are operating in different jurisdiction, and there was humongous difference between the market cap of these companies. So we initiate a buy call with the blended methodology of DCF 90%, relative valuation 10%, with 704 per share target price for year ending 2025. Given the current business environment, declining interest rate and declining cost of equity and required return on equity, we believe systems offer a significant upside potential and attractive valuation.
Finally, there may be some inherent risk with the business model of system and the way system operates when it comes to heavy reliance on certain clients, technology obsolescence, talent shortages within the country, regulatory hurdles. However, system has been proactively managing these challenges by diversifying their client base, investing more and more in research and development and employee development. They have been hedging themselves with the currency risk. So in all, we believe the way system is managing and mitigating all these challenges and the risk they are facing, Systems Limited is definitely a buy call. By Systems Limited, a company that's limited only by its name, not by its growth. Thank you.
Thank you, team. I have a couple of questions. My first question is, you mentioned that Systems has strong cash flow generation, and that will enable it to, continuing its, acquisitions. And I know there's been success, for instance, NDC Tech, but your slide showed that there were certain failures as well, Jomo, Chuknu, 3 or 4. Do you think it's a good thing that they'll continue to invest like this, or not, given their track record?
I think it is a good thing, because Jomo and Jugnu were like kind of learning experiences for systems. And secondly, NDC Tech ended up being a very successful investment in the BFSI sector. And especially given the SBP regulation as well, the companies that systems can acquire has increased by manifold, because now it can make foreign acquisitions as well. So I think it's necessary for a company like Systems, which has excess cash flows, to utilize our cash flows over there.
All right. My second question is on, in terms of valuations. I mean, you mentioned that most of the company's revenue comes from exports. How much is that? And if it is an export-oriented company and most of the revenue is from abroad, why use local interest rates and local risk premium to value it? Why not use US interest rates as the risk-free rate, or the US long-term CAGR as your base? And why use Pakistani metrics?
In calculation of the revenue, we have incorporated all of these things, but in valuation, we have used the Pakistani and local things. For instance, the interest rates and everything, we have used the in Pakistani market, because we have already captured the impact of that in our revenue and the cost.
Okay.
Yeah, so I think my first, I also have a couple of questions. First is regards to your valuation. So you did say that you have not utilized, you've compared with international markets, but you have not utilized them for your analysis. I'm just curious to understand your reasoning, considering that, as Raza pointed out as well, that most of the revenue is coming from abroad, right? So is it a fair comparison to compare it to companies in just India, in our local regions, or can we also compare it to other regions? And why have you not? I want to understand your thinking behind that.
Basically, our rationale was that these companies are operating in different jurisdiction, and there was a market cap humongous difference. These companies were in billions, while System was in just millions in terms of the market cap. So that was the prime reason behind this, and I think if we take the impact of this, the valuation will go up. So it shows that the Systems is slightly undervalued based on the global players, and it will enhance if we take the impact of this.
Okay. So my quick second question is regarding you were talking about competitive moats, that that Systems is able to remain competitive in different regions, and they don't have a lot of competition. Can you elaborate on that? Why is there no competition in MENA region, for example, and what's the scenario? What's happening there?
So I talk about basically regional players like the Netsol, Evansion, different companies. These companies operate in niche segments, like Evansion in finance and leasing. Evansion operates in energy management. So while it comes to Systems, it has diverse offering from BFSI, pharma, telco. So this is the main reason, and it has clients recurring revenue. It has recurring revenue. It has clients in Fortune 500. So these are the competitive mode that the local players do not have.
It's also because Systems, what it basically does is that it converts its enterprise clients into recurring revenue clients. So whatever IT services they need later on, they can contact Systems for that. So that's why the competition point came in.
Sarikum, going back to your mix of revenue and cost, you started the presentation by saying that the costs are in rupees and revenues in dollars. Can you tell me the composition of the costs in rupees, and how has that changed over the years, and how have you incorporated that in your projections?
Okay, so for the salary cost, it has specifically been consistently around 70% for Systems, and that is the main cost driver in their cost of goods sold. The way that we have forecasted it basically is we targeted their human capital. We first found out employer productivity by, first of all, we discounted the future revenue of Systems to the present value, and then we divided by the number of employees, so getting a figure for employee productivity. Then we assumed that employee productivity is going to increase 10% year on year, because this is the technology sector, and as technology further becomes more efficient, your employees are also going to become more efficient. And similarly, we also found out the salary per employee, the present value of the salary per employee, and then we increased it by the wage inflation in Pakistan, and that's how we ended up with the salary cost figure for Systems.
So if I ask the composition of your costs in the currencies, that does not change in terms of mix?
Yeah, because Systems, that's the main competitive advantage for Systems, the cheap labor in Pakistan. So it wouldn't change.
And that has not even changed in the last
Like
5
it
years.
may change but a certain proportion, because as employees are getting more productive and the wage inflation is also varying across years. In recent years the wage inflation was quite high, and forecasting future wage inflation won't be changing that much. So like the proportion, about 73% of the salary proportion of the cost of goods sold is decreasing slightly, but it is not something that will be producing a drastic effect.
Just going back, if we go 5 years from today, in the past, was this composition the same in terms of costs in the currencies?
Well, the composition 5 years ago was like a bit lower, I would say. Like in around 2020, actually, I think it reduced to like a little bit below 70%. And the reason why it's increasing now is as systems is entering into the MENA region as well. So there's a requirement over there that we're supposed to hire a certain number of workforce locally as well. And since wages are higher in MENA, so we're going to see an effect of that.
Thank you.
Okay. Nice tagline, actually. I like the one, the limited one. So that was really good. Just a quick question I have in terms of the thesis that you're presenting, in terms of your push to the case. So the thesis one, it's about the growth in the high, obviously growth MENA region, right? And you talked about very aggressive ones. So obviously from the 65% abnormal growth, you are breaking it down to about 30% in the forecasted period. How long you have done the projection, and which year you guys have applied the terminal growth rate for your FCF evaluation?
So we believe that with the Saudi vision of 2030 and with the all Middle East region in 2030, systems may have a healthy CAGR of about around 30% for next 4 to 5 years. After which, like we believe there will be a terminal growth rate around 10 to 12%. Not around like the terminal growth rate that systems is having in the rest of the regions, because Middle East is already a rapidly expanding market when with its connection to the South Asia and everything. So we believe up till 2030 systems can have a healthy CAGR of 30% in the Middle East region, after which it will be reducing around to 10 to 12%.
So essentially that's normally the multi-stage growth model that we see, that initially grown at about 60% and tipping down to 30% and then normalizing about 10-12%.
Exactly.
Right? That's fine. Now in terms of that, how actually have you applied your terminal projection? Basically the 30-year growth projection that is going to run up to 2030 as you mentioned. So what is your terminal year at which you've applied the growth, and taking it up to the infinity?
So basically we have applied on 2029 and we have taken IMF different projections of IMF different regions from MENA, US.
No, that's clear. But I'm not interested about the terminal growth rate. I'm talking about if you're running a relatively mid-stage growth level of 25 to 30%, if you're applying the terminal growth on that level, is it sustainable? Because when you're applying the terminal growth, that is about taking the company as a going concern. Huh? It takes to the infinity level basically.
Exactly. We believe we had a but like we had a very separate assumptions for each of those regions. For Middle East and APAC, we believe those regions are offering very high potential growth in like for next 10 to 15 years. So like having a terminal growth at 10 to 12% could be sustainable, and like having an overall terminal growth of 5% on an average for across the regions with systems growth decreasing in Pakistan region and everything. We believe that it is a very quite sustainable percentage to have in Middle East region and APAC region.
Okay. Thank you.
If I may quickly ask, you mentioned that I think more than 50% of the board is independent and they're all on the audit committee. Correct me if I'm wrong, but I don't think they don't come from the tech sector. So do you think that's a good thing to have? It's a good thing to have independent directors, but they don't have tech expertise. What are your thoughts on that?
So definitely a board not having a tech expertise may hinder some of their decisions, but like coming forward, like the board has chairperson Masood Arshad and its competitor, so like they have a very good history of like having what system came from and like how it's was positioned across these years. So like they have certain sort of experiences and with the all sort of leadership stabilities and everything. We believe that they possess those expertise to have a good experience.
Thank you.
Well done, Team Rising Fintellects. That was a strong and well-structured presentation. Please give them a round of applause.
teams.
Next is Team Value Hunters. Okay. Thank you. जी कौन सा पूछना है?
Up next, we have Team Value Hunters. This team has spent countless hours dissecting financial data and market trends to bring us their investment recommendations. Let's hear what they have to say.
Hello.
Assalamu alaikum everyone. We are Team Value Hunters and we initiate our coverage on Systems Limited with a buy recommendation based on 12-month target price of 815, offering an upside of 42% on the last closing price of 575 as of 14 January 2025. Our recommendation is based on the following reasons. Systems Limited is redefining the tech landscape by pioneering generative AI, cloud computing, and data analytics, delivering cutting-edge solutions across diverse industries, including BFSI, telco, and FMCG, With 2030 Saudi vision fueling digital transformation, Systems has capitalized on $36.6 billion ICT opportunity, making MENA its biggest revenue driver. Strategic alliances with tech giants like Microsoft, IBM, Salesforce gives Systems a competitive edge, unlocking enterprise-level opportunity. With strong financials and high-impact acquisitions like NDC Tech and Treehouse Consultancy, Systems Limited continue to expand aggressively while maintaining their long-term sustainability. Moving into the business overview, Pakistan's first software house, Systems Limited, has evolved into global tech powerhouse operating in 16 plus countries with 7,000 plus employees. Deriving technological solutions with 87% of revenue comes from exports. MENA leads the region with 58% of revenue. Now, from revolutionizing core and BFSI sector contributing 30% of revenue. With resilient business model, dollarized contract, and strategic organic growth, Systems Limited remains Pakistan's premier IT investment opportunity.
Pakistan's IT industry is at a turning point poised for exceptional growth. The Pakistani government expects $25 billion in IT exports over the next 5 years, gearing the sector for a rapid expansion. The Pakistani IT service market is expected to grow with a CAGR of 7.36% driven by global demand, especially from the GCC region and through key policy reforms by the SPP. Amidst this growth, Systems Limited continue to remain a strong market leader in the Pakistani IT landscape with an exceptional 30% CAGR over the last 10 years, far surpassing the industrial average of 12% historical average. Pakistan's IT served, moreover, in the first 7 months of fiscal year 25, Pakistan's IT services exports have reached 2.17 billion USD compared to 3.2 billion USD in the entire fiscal year of 24, showing strong growth potential. The global IT industry is expected to grow with a CAGR of 5.58%, with MENA boosted by the Saudi Vision 2030 program and by the major events such as the FIFA World Cup. This offers key opportunities to Systems Limited to grow and thrive in this key region. Furthermore, the Asia Pacific IT services market is expected to expand with an 11% CAGR over the next 6 years, showing high growth potential in this region. This means one thing for Systems Limited: outnumbered opportunities in a rapidly growing market. Systems Limited has continuously outperformed the KSE 100 index in the recent years, with the share price growing rapidly, particularly post-stock split, driving its market capitalization beyond 168 billion.
Starting with the revenue, Systems Limited has seen remarkable surge, achieving their highest revenue of PKR 153 billion in CY23. We anticipate a 25% increase for CY24, and from then on, a continued growth at a CAGR of 28% through 2029. This momentum is driven by continuous innovation, signing enterprise clients, strategic partnership with big tech companies, all supported by a 93% dollarized revenue stream. A major catalyst for future growth is the MEA region, where rapid digitization and highest forecasted IT spending yield are yielding impressive results. MEA region now contributes 58% to the revenue, and we anticipate it to grow at a CAGR of 27% over the next 5 years. Now, while the Systems Limited top line remains strong, outperforming industry peers too, the profitability is also stabilizing. The company is not just expanding, but optimizing. So we expect gross margin, EBITDA margin, and net margin to stabilize over 25%, 16%, and 13% respectively over the next 5 years, making the company well-positioned for a sustained operational excellence. The core earnings are set to rise, reflecting the strong potential of the company. Beyond profitability, Systems Limited has a strong financial position with no long-term debts and healthy cash flows, keeping its financial risk low. With steady ROE and ROA, the company ensures a sustained growth while maintaining a 20% dividend payout ratio, for its shareholders. This strong financial position and healthy cash flows also provide a room for strategic acquisitions, driving the further growth and market expansion.
We issue a buy recommendation for Systems Limited with a December 25 target price of 815 PKR per share with an upside potential of 42% from the last closing price of January 14 at PKR 575 per share. Our assumption is based on discounted cash flow model. The assumptions for our model include cost of equity, which is calculated by which arrives by the CAPM model using risk-free rate at 12%, which is 10 years PIB rate, and a risk premium of 6%, along with a beta of 1.06 and a terminal growth rate of 8%. We also did sensitivity analysis, where in our bear case, we have 815 as our price. If we increase our terminal growth rate by 2%, we get a price of 995. Consequently, if we increase our cost of equity by 2% and keeping the same terminal growth rate, we get a price of 665. To support our buy recommendation, we compared Systems PE with local and regional peer PE. Systems 5-year trailing PE stands at 22 times, forward PE stands at 14 times, compared to the local peer PE at 27 times and regional peer PE at 41 times, showing that the stock is undervalued and confirms our buy recommendation. We also did bull and bear case analysis, where bull case showed us a price of 995.
Now, moving towards the ESG, System was recently recognized as a runner-up in the second annual American Business Council of Pakistan ESG Awards. Let's talk about environmental initiatives first. System uses energy-efficient equipment and reduces its energy consumption through carpooling. System reduces its waste and water waste by reduced, reuse, and recycle policy. Let's talk about social initiatives now. System promotes work culture environment through different activities like trainings, workshops, and employee engagement programs. System creates equal opportunities, and gender diversity is actively promoted with women in senior management position from 16 in 2022 to 25 in 2023. Let's talk about governance now. System engages its 8,094 shareholders, with directors owning the largest share at 27%. System has established directors' compensation policy in line with the CCG. There are a total of 7 directors, out of which 2 are women, reflecting efforts to improve gender representation. Now moving towards the investment risk, we have highlighted these key risks, among which the impact of economic risk is more because of the instability of the country. As for the rest of the risk, the likelihood is low because of companies' diversified supply and customer base. Thank you so much. That's it from our side. We are open for questions.
Thank you, team. If I may start with the first question. You mentioned that you're seeing a revenue CAGR of 28% till 2029. If you break that down, how much is being driven by volumes? How much of that 28% is being driven by pricing, and how much by PKR depreciation?
So, by seeing the market opportunity, rapid expansion of Systems Limited and directly on subsidiaries in MENA region, we see their CAGR of 27.04% in MENA region. In North America, it was about 13% of CAGR, and in Europe, it was about 33%, and in Pakistan, it was about 8%. In Asia Pacific, it was about 66% till 2029.
But in general, how is it growing? Is it they're trying to expand, their clientele, or are they trying to increase the prices on each of their projects or the work that they do? What's the main driver for the revenue?
The main driver for the revenue right now is the MENA region because of the opportunities there. And also now they are focusing on enterprise clients. They have signed 10 new enterprise clients this year. So this will boost their growth many times than this. And also,
to add in that, Systems is currently expanding on where it has already made investments, like in the MEA region and KSA. They're expecting that region to give them more profit.
Thank you.
How much is the debt actually contributing to the increase in profitability in the recent years? Is the debt reducing, number one? And so because of that, why are you valuing at FCFF specifically? I want to understand the correlation.
Okay. We have used FCFE, and there is no long-term debt of systems. It has minimal debt. Basically, there's short-term borrowings, which stands at 9% cost of debt.
We understand that a lot of focus is on the MENA region right now and going forward. But the second largest exposure is in North America, right? And now the kind of growth numbers you've taken in your projections, how does that mix change in the next few years?
According to our forecast, we expect that MENA region will continuously grow with Apex, with North America share to be replaced by Apex, Asia Pacific. By about in 2029, we expect that Asia Pacific will be around 29% and the North America region will be around 3.5%.
And that's because of the opportunities in the APAC region, as the IT services market in APAC is growing at 11%. And also the Systems Limited is focusing on APAC.
Sorry, did you say 3.5%? How much did you say? Can you repeat?
According to our forecast, it's around 4.9%. I'm sorry for 3.5%.
Guys, a few questions. If you can just put on the slides, please. Presentation on the screen. Okay. Just on sort of follow up on Ramreen's question with regards to the breakup. So if you can just come to the revenue trajectory that you've shown one of the slides. Yeah, this one. So essentially, how do you guys arrive at the projection in terms of the the next few years? It's a CAGR driven, keeping the market share or sort of market share in terms of that in perspective, or you've grown the market as because of the rationale that you've pointed out that the markets are growing faster, the share will rise, or you keep the same share across the board?
Well, we have drive our revenue, seeing the market opportunity, also the systems performance in these region in the recent years. In the MENA and APAC, it has grown massively. So that's why we have focused on MENA and APAC. And in the other regions like North America and Europe, system has not grown that much. So that's why we have keep their CAGR lower.
Okay, so that's in terms of the growth that you have captured in, and that is driving the share, not the other way around, right? Yes. Okay, fine. The next, in terms of you project in earlier slides, the IT services market, right, for the next few years for Pakistan. What the basis of that? It's your own analysis, you picked up from somewhere, I could not find a source there.
So in reality, I missed a point here. For the first 7 months of fiscal year 24-25, the Pakistan IT services exports have reached 2.17 billion, and compared to 3.2 billion in the entire fiscal year 24. And further, Minal will explain.
In 2024, fiscal year 2024, the IT service market stood at $2.4 billion, and according to the CAGR of 7.36%, it was expected to reach 2.6 billion in 2024, but fiscal year 2024. But in the recent months of fiscal year 2024, the IT sector has performed really well, and it has reached 2.17 in the first 7 months. So it is expected to be around $3.2 billion in this fiscal year, and for the next year, it will be around $4.2 billion. Also, the government will be expecting to reach $5 billion till 2029.
But my question was, what are the basis for that?
Okay, the basis we took are SBP, the data from SBP.
Okay.
And Statista. CAGR for Statista.
Okay. If we just come to the valuation slide, please, where you've shown the terminal growth sensitivity. Yeah. What are the basis for that 8% terminal growth rate?
As I mentioned before, the IT service sector in Pakistan is expected to grow at 7.36%, but system outperforms the market, and we believe that it will. That's why we have taken 8% terminal growth rate.
Okay. What is the next few years GDP growth projection for Pakistan by IMF or any other credible institution?
The GDP growth rate for the current
No,
year,
the next 4-5 year, the projected period. Have any
will be
idea?
around 4.5%.
So, in order to capture the terminal impact of this particular company, because that's operating within the Pakistan, right? So, more than double of that growth you've taken as a terminal rate. Do you think it is logical?
Yes, because IT sector grows more than the GDP itself, the percentage of GDP itself.
What has been the average in the last 5 years? What's the average GDP growth and what's the IT growth in the last 5-year average or whatever?
The average industrial historical average of the industry is about 12% in the last 10 years. It's 12% CAGR.
Okay.
Yes. So we have used terminal growth of 8%. That
Okay.
call
Thank
of
you.
Could you please go a slide back? What is this 20% DPR you mentioned? Is the dividend? Is this the dividend payout ratio?
Yes, it's dividend payout ratio.
Okay, so now that you're seeing that, I mean, obviously they're growing so quickly and you expect them to grow so quickly, is this a good thing that they're paying out 20% of their profits? Do you think they should retain more and focus on their growth? Or do you think they should increase their dividends?
Well, in the CY22 and CY23, systems growth massively, but they didn't increase their dividend payout ratio. Instead, they used that money to done the strategic acquisitions, and they have mentioned in their briefing session that they will do more acquisitions to drive their growth, to boost their inorganic growth. That's why we have kept it at 20%.
So you were saying it was
Yes, which is what it was, and
So
we
you've-
took it, we assumed it will be like that.
Okay.
So I just, in one of the slides you showed that a lot of the directors have shares in the company, a lot of the employees, ex-employees have company shares. Do you think this is a risk factor or is this a good thing?
No, it's a plus point if directors own the largest share because they will think about their company's success in the long run. So that's why we think it's a plus point.
Just final question from my end. With the current business segments and the way AI is growing in the world, do you think AI can be a risk to any of their ongoing segments, or can it be an opportunity for them?
AI solutions are an opportunity for them. They will replace their traditional methods, their traditional services, and replace it with the new coming AI services like generative AI and other services.
As they already drive these solution in across BFSI sector, telco and FMCG. They already used Gen AI cases.
Does the company currently also offer any traditional tech services?
Tech services.
There is a tax exemption on the IT services companies, but there is a revenue export tax on revenue export, which is around 0.25%.
Thank you.
Thank you, Team Value Hunters. A truly insightful and well-structured presentation. Let us show them our appreciation by giving them a round of applause, please. We will now take a short break for Asr prayer, and we will resume at 5:30 p.m.
within 4 years. You earn the CFA charter by completing the 3 levels and attaining the relevant work experience. It is the highest distinction in the investment industry. Finance. Want to know more? Check out our other beginner's guide videos or visit the link on the screen. Work experience. It is the highest distinction in the investment industry and means you have earned the right to use the letters CFA after your name. As well as being globally recognized by employers, completing the CFA program gives you a competitive advantage in the job market and increases your earning potential. Whether you are a student, an investment professional, or looking to switch careers, the CFA program can help you build a rewarding and successful career in finance. Want to know more? Check out our other beginner's guide videos or visit the link on the screen. The Chartered Financial Analyst designation, CFA, is one of the world's most recognized and respected.
We now resume our presentations with team The Short Sellers. This team has worked diligently to craft their analysis and we look forward to their perspective. Over to you, team Short Sellers.
Hello, ladies and gentlemen. Forced by the strong fundamentals of Systems Limited, the team Short Sellers has decided to give a buy recommendation based on the 12-month target price of rupees 796 and with an upside of 45% till the last close of rupees 547. Systems with a total revenue of 70,061 million has diverse sources of revenue, both in terms of segments and regions, with Middle East region having the highest revenue share of 58%. And similarly, the banking, financial services, and insurance segment has 28% and also contributing 1.5% of total GDP. Moreover, in the last 9 months of 2024, UK and USA have become the largest export destinations with a total of 66% of Pakistan's total IT exports. Our buy recommendation is based on 3 of our thesis points. Firstly, Systems has expanding margins. Secondly, it is highly undervalued by the market. And lastly, it has huge growth export potential. The expanding margins can be defended by the fact that there are declining inflationary pressures with the projected inflation faces a significant decline from 29% in 2023 to 77.5% in 2030. Secondly, there is a shift from public sector clients to private sector clients, which will sharply boost the margins, as reflected by a sharp increase in gross profit margins in Q2 of 2024, with a negative gross profit margin of -4% to a 6% in Q3 of 2024. And lastly, along with the gross profit margins, both the net profit margin and EBIT is expected to stabilize in the long run, as the revenue of system is based on exports and there is a long-term trend of depreciation in the exchange rate, and the cost is based on the inflation rate of Pakistan, which is also expected to decline. So overall, the margins will expand.
The second reason why you should invest in this company is because it is relatively undervalued.
We have identified both global and local competitors, and the average PE adjusted of country risk premium is 24x compared to the average to the system's PE, which is 18. Moreover, the EPS of the company has increased from 5.4x to 24x in 5 years, which shows strong upside potential in the future. Now, moving towards our next investment thesis, which is that systems high export growth is a key investment driver. The company's IT export margin in Pakistan has increased, market share has increased from 2.2% to 6.8% in the last 5 years, while maintaining an impressive CAGR of 56%. We believe that systems will continue outperforming in the IT sector with an estimated 5-year CAGR of 26%. Now moving towards our financial analysis. We have used conservative approach while valuing revenue forecast, because we believe that industry is consolidated in North America and Europe, and in Middle East 55% of the revenue is generated, and we believe that this trend will continue in the future as well. Now moving towards DuPont analysis, although the system's asset turnover is outperforming compared to peers, the ROE is below the peers because of low margin and low leverage, and this brings the best opportunity for the company to take on additional debt because of lower CIBOR rates to increase EPS and ROE. And lastly, according to Altman, Z-score and Beanish M-score model, the company has low probability of default and no signs of manipulation as well.
Our valuation results in a target price of rupees 796. That represents a 45% upside to our last close of 547. We used a blended valuation approach in assigning a 60% weight to our FCFE-based intrinsic valuation and 40% to our relative valuation. For our DCF model, we came out at a price of rupees 706. This was based on a cost of equity of 19.7% and a long-term growth rate of 7.1%. To now test the robustness of our DCF model, we ran Monte Carlo simulations with over 10,000 trials, and our analysis shows that in over 48% of the scenarios, the share price comes out to be higher than our DCF target price. That really supports our buy recommendation. Moreover, the cost of equity that we calculated was again based on a blended approach. We prioritized the Pharma French 4-factor model that incorporated the market risk premium, the value factor, the size factor, as well as an additional ESG factor. Moving on, our market-based approach incorporated the PE multiple and the PS multiple. This allowed us to incorporate both systems' revenue potential as well as its earnings growth. And we expect systems to trade closer to its peers in the future, given that it currently trades at a discount. And our relative valuation target price comes out to be 932, which represents a 70% upside. Moving on, we also wanted to test the robustness of our overall blended valuation. And for that, the key drivers of our target price include global expansion, AI disruption, and exchange rate. But overall, our scenario analysis suggests that we actually have a strong risk to return profile. And once again, that really supports our buy recommendation.
Systems Limited is positioned pretty well in terms of its environment sustainability because of its smaller environmental footprint. It has been able to reduce its paper usage by 32%. However, its energy consumption is a point of concern, and the systems has introduced several green initiatives such as carpooling and shifting towards renewable energy sources to cater to this problem. As for the social problem, Systems is committed to social responsibility by investing in employee welfare, digital education, and diversity. So, as for the sake of employee welfare, the company has increased its insurance coverage of its employees, and has initiated several educational programs for its employees. Apart from that, in order to enhance digital literacy, the company has partnered partnered with different universities across Pakistan to bridge the gap between academia and the industry. Within the senior leadership, the gender diversity has improved, but in overall workforce, gender female representation remains at 14%, which is a cause of concern and signals room of improvement. As for the board of directors, Systems Limited surpasses Code of Corporate Governance minimum requirements. It has more independent members, directors, and fewer executive directors than those that were mandated. And for the female directors, it has one more female director recently appointed. So its female representation is now 29%, which surpasses both the industry average and the minimum requirements of the Code of Corporate Governance. For the Systems Limited is mainly owned by institutions which make up to 43.3% of the ownership, and there are only three shareholders who own more than 5% of the company, which means that no shareholder has a lot of influence on the decision making. Lastly, the company has exceptionally well members on its executive management. The CEO, who has been with the company for the past 28 years, has been steering the company towards its success, and that is why the company is where it is today.
Moving on to the ESG Focus Index. We developed an ESG Focus Index of KSC 30 companies using Morgan Stanley's methodology. So by running regression, we found out that ESG premium was negative, showing that investors settle for lower returns for companies which are ESG compliant. Moreover, the ESG beta for Systems Limited came out to be 0.369. This shows that Systems Limited is ESG compliant. On our rankings, Systems Limited ranked 8th out of the 30 KSC 30 companies. So moving on to the investment risk, we broadly classified investment risk into 3 categories. First one was market-specific risk, second, industry-specific, and third, firm-specific risk. And then we plotted these risks on risk metrics based on their probabilities and potential impact. Firstly, focusing on high-impact risks, which are inflation risk and disruptive potential of AI. So our estimations show that very slight fluctuations in these variables can affect our valuations from 18% to 28%. Moving on to the moderate impact risk, which are increase in tax rate and forex risk. So because of these risks, our valuations can be impacted up to 27%. So in conclusion, managing these risks is very important to have a very good investment strategy. Thanks, that's all from our side.
Thank you for the presentation. I have a couple of questions. My first question is, I think on one of the slides you mentioned that in valuations you've taken a country discount, right? You've taken a country discount?
Yes.
Yeah. Why have you taken a country discount? I mean, do you think that's justified? Most of the earnings or revenue, as I understand it, comes from abroad. Why assign a country discount?
Yes, so according to our understanding, Systems has no real direct competitors within Pakistan. So we've taken competitors and peers from India, from Vietnam, etc. And obviously, for example, if we just talk about India, it's a more expensive market as compared to Pakistan, because obviously the country risk that they face is lower, and hence their high growth rate and the more expensive the market that is. So obviously, what we did, we used the country risk premium of each countries. We calculated the differential country risk premiums, and this allowed us to come at the country risk premium discount factor, which we then used to discount each country's, the peers that we got from each country based on their country risk premium. So we discounted according to that to reflect the different nature of each market.
So how much is that discount that you've...
Yes, so I think it's mentioned on the slides. For India, the discount factor is 0.92. For Vietnam, it's 0.93. For Taiwan, it's 0.9. And if you look at Argentina, its country risk premium is actually higher than Pakistan. So the discount factor is actually greater than 1.04.
Okay, my second question is on risks. So you've mentioned 4 or 5 risks. But one that I thought should be there was employee retention. Do you think that that is a risk for Pakistan in Pakistan's IT sector, and why have you not shown it on the slides if you agree?
So we believe that like Pakistan has a huge pool of IT graduates available. So annually there are like 25,000 IT graduates. So we feel like this is not a risk to that extent, but still the company should retain, try to retain employees, because after all, the company's main asset is its employees.
Okay, thank you.
Thank you for the presentation. Yeah, you mentioned that there's a disruptive potential of AI, and that is potentially going to reduce the valuation as well. What are they doing to mitigate this, and have you accounted for that in your analysis?
Yes, so we already obviously know that most IT services are now being replaced by AI, and the company obviously has to keep up with the changes, because companies are obviously preferring IT solutions more than traditional solutions. And I think we've mentioned in the report and in the slides as well, to basically mitigate that risk, the company is highly and increasingly using AI in its products. And I think that's a good mitigating factor, because it's trying to keep up with the changing demand, and as it tries to keep up with the demand, it's adopting AI, and that is basically allowing to meet the demand of the clients.
Okay, in one of the comments that I think your friend on the side made was regarding that the company has the potential to take on more debt because it has good cash flows.
Yeah.
I want to understand, why do you think they will want to even take debt, and is that a good thing?
Yes. So debt is obviously cheaper than equity, and the company's cost of equity is currently it is very high, 19%. So if they are taking more debt, then the WACC will reduce, and this will optimize the capital structure. And secondly, the Altman Z-score and all credit risk factors also show that the companies can take additional debt. So why not take additional debt? Because the interest coverage is also increasing by every year.
So one thing is looking at it mathematically, right? The other thing is looking at the unit economics. If the unit economics are generally positive and it's increasingly cash flow year on year, why would they even want debt? मतलब उससे क्या करेंगे?
So the use of debt could be in short term, because short term debt is used for net working capital financing. Currently the company is financing 80% of its net working capital from internal cash, and this is reducing the retained earnings. So I would say that the company can use short term debt, not long term debt, to refinance the working capital.
Thank you.
Assalamualaikum. Can you please explain in their North America business how diversified are they, or what kind of operations or services do they offer?
Yes, so it offers a variety of services. I think we've discussed at the start. The systems operates in 4 main verticals. There are other verticals as well. So I think within North America, there are comparatively larger clients, and it has consolidated over the years. And it offers, within these services, I think it offers a variety of them.
Okay. So can we analyze or get an idea what kind of key risks are there for their North America operations right now?
Yes, so there's one particular risk that we did assess during our analysis. With the political change, recent political change, we fear tariffs could play a key role in our operations in North America. So that's one factor, but how we believe that will be mitigated is through the tariffs. We believe the new governmental administration is trying to reduce the current account deficit, which will actually lead to the appreciation of USD. Which obviously improves our revenue projections. So even though if tariffs play a negative role within of our revenues within North America, because all our contracts are USD denominated, and any appreciation in the USD would actually improve our revenue projections and eventually our target price as well.
Okay. Can you just come to your investment thesis slide, please? The one with the gross profit margin chart. One before this. Can you just repeat what in FY24 2Q?
Yes.
Yeah. So within Pakistan, within the domestic market, so we operate in a lot of geographical territories. But as for Systems Limited, our gross margin is the lowest within our domestic economy, and that's because we have contracted with a lot of public sector company, organization, and SMEs, and they are actually loss-making contracts. And we expect that that's what happened. By the end of 2024, most of their contracts, loss-making contracts with public sector entities actually ended. And that is why we believe that the gross profit margins, which were previously negative at points, they would pick up, and hence our investment thesis that the margins are going to expand.
Exactly, and I think that's reflected in the difference in our gross profit margin within quarters, the previous slide. As you can see in quarter 2, our gross profit margin was very low, and in the next quarter it jumped to a considerable figure. So that's exactly the reason. The shift from public sector clients to private sector clients has impacted and resulted in this jump of gross profit margin.
Thank you.
Okay, thank you guys. I have a couple of small questions, but before that, the answer that you're giving to Amreen's earlier question with regards to, the government is trying, you just mentioned the government is trying to bring down the current account deficit, which will help in appreciating US dollar, which will help the company itself. Can you explain that thing? By reducing current account deficit, how can it appreciate the US dollar?
Yeah, so when when the current account deficit reduces, they're basically importing less, they're exporting more, right? So when they're exporting more, the demand for USD will logically increase, because it will logically increase, and it will
reduce.
With the fall in imports, the supply of USD will also increase. So the demand will decrease. The demand will increase. The supply will increase. The supply will decrease, So that will eventually result in an appreciation of the USD.
Okay. Just a two quick one there. You've taken the 7% terminal growth rate. What's the logic or rationale behind it?
Okay, so for calculating the terminal growth rate, we took into account different economic factors, macroeconomic factors. So we took into account the IT sector growth rate, the exchange rate, the inflation rate, the GDP rate, and we tried to determine the correlation of these factors with companies' sales, and then assigning the weights on the basis of correlation, we tried to determine the terminal growth rate, which came out to be 7.1%.
Okay. Who's the auditor of Systems Limited?
0.92 beta.
Which firm is the auditor for Systems Limited?
AF Ferguson, not.
Thank you.
Thank you.
Great job, team short sellers. That was a well-articulated and compelling presentation. Let's give them a round of applause. Moving on to our final team of the evening. Last but certainly not the least, please welcome Team Yield Seekers. They are ready to deliver their investment insights and showcase their hard work. Team Yield Seekers, the floor is yours.
Hello. Thank you. Assalamu alaikum. We are initiating a coverage on Systems Limited based on a target price of rupees 724, providing an upside of 32.4% as of 31st December 2025. There are three factors that drive this recommendation. First, Systems is positioned for a robust growth in the MENA region. Second, Systems enjoys the currency hedge. And third, Systems' unique business positioning model focusing on mid-tier contracts is expected to drive long-term growth. This is Saad Javed, and we are Team Yield Seekers. Now let me introduce you to the company and the business overview. Systems enjoys an experience of around 5 decades, specializing in digital, data, AI, and cloud, constituting 97% of the total revenue, while the 3% of the total revenue comes from the BPO services. If you look at the revenue and cost breakup, Systems Limited has 95% of the revenue in FCY, while only 40% of the costs are in FCY, thus enjoying a currency hedge. If you look at the revenue by geography, Systems MENA region being the highest growing market in terms of the IT sector, Systems already has a staggering 58% revenue share from the MENA region. Systems having strategic partnership with Temenos also drives 30% from the business vertical, BFSI. Coming to the industry overview, the export trends in Pakistan for the IT sectors have remained positive. If you look at the graph, the highest increase was between financial year 2020 and financial year 2021, which was due to the exports from Pakistan due to COVID-19. Moreover, SIFC was also formed to facilitate investments from different countries. PKR depreciation, which is averaged around 7% annually, also helped the IT companies in getting favorable profits. Moreover, SVP also increased the retention limit from 35% to 50%, which helped the IT companies in booking favorable profits and a higher retention limit. However, the industry stays at a risk in terms of the IT disruptions. If we talk about the competitive positioning, Systems has strategic partnership with Temenos, providing core efficient banking transformation services in the MENA region. Systems also enjoys high margins in North American regions due to cost-efficient and tailored solutions. Systems also has strong footprints in the local markets, focusing on large corporate clients. Now Hassan will walk you through the investment thesis.
Thank you, Saad. Now let's explain why System presents a strong investment opportunity. First of all, Systems is capitalizing on MENA's digital transformation driven by Saudi Arabia Vision 2030 and UAE Vision 2031. Saudi Arabia targets SAR 50 billion investments in ICT sector. Meanwhile, UAE aims to increase its digital economy contribution in non-oil GDP by 2031. This structural shift has started to translate into Systems growth as its MENA share of revenue has increased from 27% in 2020 to nearly 55% in 2023. Furthermore, its acquisition of NDC Tech secures exclusive right to country model bank of Temenos. Meanwhile, its acquisition of Treehouse Consultancy has enhanced its high-end IT solutions. With MENA revenue projected to grow at a 5-year CAGR of 20% and digital adoption accelerating, there remains a significant potential for Systems to enhance its footprint in this high-growth market. Secondly, System enjoys a natural currency hedge with 95% of the revenue and only 40% of the cost in foreign currency. For local investor, this provides an exposure to foreign currency-backed asset hedging against depreciating PKR, which has averaged around 7 to 8% annually over the last 30 years. For foreign investors, this mitigates currency risk as seen in the emerging markets like Pakistan. With currency hedge, System ensures sustainable growth and appeal for both foreign and local investors. Lastly, System has a unique business model which focuses on mid-tier contracts while dynamically positioning itself across all tiers to capture opportunities. It has a low revenue per employee in USD term among its competitors, which indicates a strong growth potential. Lastly, it also leverages low-tier contracts to upskill and train its talent for mid-tier projects, ensuring a sustainable pipeline of skilled resources. With these three factors, number one, MENA expansion, number two, currency hedge, and number three, unique business model, position system for a sustainable growth, ensuring a compelling investment case. Now, Nibras Azim would walk us through financial analysis and valuation.
Diving into the financials, System isn't just outperforming its peers. It offers greater profitability and higher margin at an attractive valuation, making it a compelling investment opportunity. Further, we forecast net margins and EPS to remain strong over the forecasted periods, which were mainly down due to high salary expense and change in revenue mix. We also noticed that in 2019 to 2020, System's revenue per employee declined due to System using a low labor cost model, which rebounded in 2021 when they switched to a higher skilled labor force. Further, we forecast that revenue per employee to grow at a CAGR of 2.5% and cost per employee to grow at a CAGR of 2.3% in USD terms over the forecasted 5 years. Moving on to our valuation, due to System's stable capital structure, we used a blended approach. Due to System's stable capital structure, we used a free cash flow to equity, and to incorporate market view and valuation, we used relative valuation, where we applied a premium of 125% over the KSE 100 index PE of 6.5. To enhance our valuation, we conducted sensitivity analysis, where we varied PKR depreciation, cost of equity, terminal growth rate, and premium over inflation for salaries expense. Now over to Hafsa, who will be speaking on ESG.
The ICT industry drives 3.9% of the global greenhouse gases and carbon emissions through energy-intensive hardware, embodied carbon, and cloud computing. So Systems Limited is addressing this by focusing on energy efficiency, shifting towards renewable energy, water conservation, and waste reduction. The company exemplifies this by aligning with 8 SDGs, maintaining a moderate ESG risk profile, outperforming Pakistani peers despite a low international ESG rating. The company is well positioned among peers. Though the company has seen an increase in energy consumption cost per employee in 2023 by 25%, while attributed to global expansions, we believe that clear mitigation strategies could help the company improve their ESG profile and ESG rating. The company also supports employees through employee support programs and CSR activities. The governance of the company has 37% director employee ownership, which ensures reduces external influence. Transparent reporting ensures minority shareholders' rights with one share, one vote systems and proxy access rights. The board with a 29% female representation and a 57% independent directors ensures a strong oversight. However, the board operates at a bare minimum of 7 members, though the company does adhere to the CEO-chairman duality standards. We've identified 3 key risks for Systems growth and profitability. Talent acquisition and retention challenges in Pakistan's IT sector pose a significant risk as salaries expense average 67% of the total cost. However, Systems initiatives like the Future Leader program and the IT Mustaqbil training program fosters a pipeline of local skilled talent and reduces reliance on costly foreign hires. Secondly, increased competition from international players could pressure Systems margins. However, Systems' strong reputation for high-quality solutions and strategic positioning in focus markets like the Middle East provided with a competitive edge. Thirdly, the lack of a sustainability report could hinder the company's ability to attract global investors and clients, especially in the markets where ESG compliance is a critical factor. We believe that the company, by issuing a sustainability report, could increase its competitiveness and align with the global standards. And with these mitigating factors in place, we reiterate our buy recommendation of December 2025 target price of PKR 724 with an upside of 32%. And open up the floor to any discussions. Thank you.
Thank you for the presentation. 2 questions from my end. The first question is, you mentioned that Systems is trading at a PE of 14.6, while the average stocks in Pakistan on the PSX are trading at 6.5. So why should an investor invest in something that's more than twice what the other average stocks in Pakistan are trading at?
Okay, sir. So systems is in a IT sector, which is a high growth sector, and its sales are also growing at a much rapid rate. And if we go to the regional slides, the competitors in other regions are also trading at a premium, which is why we applied a 125% premium on the KSE 100 of 6.5. This means that not only in Pakistan but elsewhere in the region, IT companies are growing at a much faster pace, which is why a higher PE is assigned to them by the investors in the market.
And my second question is, I think one of the focal points, the three thesis points why you're pitching a buy, the second point is the currency. But the currency in Pakistan has been fairly stable over the last year, and if this remains the case for the next few years, how damaging is that to your investment thesis?
Firstly, for a developing economy like Pakistan, it is very unlikely that the currency would stay stabilized for such a long period. Moreover, currently the rear for Pakistan PKR is 104, and historically it's maintained at an average of 95. So we firmly believe that it will depreciate. Plus, recently other currencies have depreciated already, and it is expected that PKR will too.
I have a question regarding the revenue to employee ratio. So in the presentation, you generally pitch that as a great thing that it's currently low, so it's bound to get higher. But what I didn't understand was, how do you think that this revenue per employee metric is going to increase, especially if it's low compared to the peers?
We believe that the revenue per employee will increase as compared to its competitors, especially the Happiest Minds, because the company has the potential to grow.
And sir, to add on, just like I said, that the company also trains its employees on low-tier contracts to make them more resourceful for mid-tier contracts. And in 2023, Systems conducted 17,000 hours of work training and spent around 100 million rupees on these trainings conducted, which is why we believe that this employees will be getting efficient in future, and hence the revenue per employee would increase to its nearest competitor.
Further, Systems is well aware that about its employees' efficiency, and according to the last briefing, they are working towards it.
So on that same note, with regards to retention, if the employees are getting so good, they will then also start getting offers. What is Systems doing to, from a retention perspective, and is that risk anywhere accommodated in your model?
Okay, sir. So we have accounted for this in our salary growth premium adjustment, because Systems is operating in tech sector, which requires a frequent salary adjustments. So we have already incorporated that in salary expense premium. That's why we took a 3% premium on inflation while forecasting our average salary expense. Furthermore, Systems is also on a program, IT Mustaqbal program, where it trains its employees and then keeps them on benches for future projects. So this is a sustained pipeline which will benefit them in future.
Thank you.
Assalamualaikum. Can you please explain on what price level or what capital upside would your recommendation change from buy? You have a buy call right now, right? So what should be the stock price where you will change your recommendation from buy to a hold or a sell? You could just give a percentage upside or something. No exact math needed.
Yes. So usually in industry, when the upside is plus or minus 20%, we give a hold recommendation instead of buy or sell. So current our upside is 32.42%. If it comes down to 20%, then our investment thesis would change. Investment case would change to a hold recommendation.
Okay. Secondly, just adding on to what Raza asked, let's say the rupee depreciation is slower than what you're expecting, or it remains stable. What kind of an impact will it have on your valuations?
Okay, so as you can see over sensitivity analysis, our base case is 7.84% depreciation of PKR average. So if we can see that if currency depreciates not by 7.84% but by 6.5%, it will give a downside. However, as my colleague Nibras mentioned, that the currency has remained stable for a much greater time period. And we have recently seen that the Pakistan Pakistan recorded a current account deficit in the current month, and their expectations, according to real exchange rate as well, that the currency would depreciate. So that's why we believe that the currency going forward would depreciate around 7 to 8%. Although this year or the preceding year was an anomaly, but a developing economy like Pakistan cannot sustain on appreciation.
Thank you.
Okay. Didn't find any sort of earnings comparison in your core slide, but you've given in the key performance indicator one of the appendices. So the earnings, when I look at it, so you've answered that question to Raza and Amreen's question with regards to the sensitivity to the exchange rate. Instead of going too much into the future, obviously you know that the currency is very volatile. It's also very difficult to project. But just looking at the 2025 numbers, that's a significant growth of 75% that you're projecting in your bottom line. Okay, so what's so significantly happening in 2025? Can you just break it down into sort of broader idea, the currency, or so the volumetric drive? If you can just shed some light on that, please.
So our main reason behind this is that Systems has recently positioned itself very well in the MENA region, and MENA region is expected to grow at a very high pace for the foreseeable future, for the upcoming few years. And due to Systems revenue of about 55% of Systems revenue is from MENA region, so that is one of the major reasons for that.
But that will start happening right away in 2025. There's a significant sharp rise from 24 to 25. That's my point.
Okay, sir, so 2024, if you're talking about the bottom line, right, there are certain factors which occurred in 2024 and 2023, specifically impairment in associates and its subsidiaries. One of the examples is Jomo Technologies, which the Systems took. So that's why the 2023 bottom line has been impacted. But since this was a one-off event, we didn't forecast this in the coming futures. This is why the bottom line you are seeing is having a 75% growth.
So what would be the adjusted growth if you adjust that number in 23 and 24? So what would be the year-on-year rise? Have you done that analysis? After taking out that impact of one-offs?
No, we didn't take that.
Okay. And just a small one, who is the auditor for Systems Limited?
PwC Ferguson, A. Ferguson, PwC.
Thank you.
So because we have time, there's a lot of concentration in the MENA region, right, of Systems. Do you know what is the difference in gross profit margins in MENA versus some of the other markets? And basically, I'm trying to understand your buy recommendation and how it will impact depending on the concentration of revenues.
Can you please rephrase your question?
Sure. So so you said that there's a very high gross profit in the MENA region for Systems Limited, yes, right? It's the highest, if I don't recall the 55%. Number. I think. Exactly. So what is the same number for some of the other regions? And is MENA region the one that is growing the most? I'm trying to understand the buy recommendation. What are the risks associated in terms of the sales composition?
Sir, just to repeat, you said 55% margin. We haven't said that. We said the 55% of revenue is coming from the MENA region, and we have in competitive position. We have shown that North America is the highest, higher gross margin area. But since System has positioned itself in a MENA as a regional player, the high growth and the rapidness in the growth in the MENA market would definitely benefit it, which is why its share in MENA has increased.
Thank you for the clarification. No more questions.
Thank you.
Thank you, Team Yield Seekers. That was a strong and well-researched presentation. Let's hear it for them with a big round of applause. To begin the concluding segment of our event, we are privileged to hear from some of the most respected voices of the industry. Their insights will surely inspire and guide us in understanding the significance of this initiative. It is my honor to first invite Mr. Mohammad Asim, President of CFA Society Pakistan, to share his thoughts on the research challenge.
Assalamu alaikum everyone. A warm welcome to this evening today from the CFA Society Pakistan. I am extremely honored to welcome our honored guest, Chairman SECP, Mr. Akif Saeed, Mr. Asif Peer, CEO and MD Systems Limited, faculty members from the universities, judges from the industry, my colleagues who worked as graders, mentors to the university teams, and at different stages of the competition, they have helped us reach the competition to this level. So on behalf of CFA Society Pakistan, I would like to thank all of you. Briefly speaking, for those who do not know much about CFA Society and CFA Institute, the CFA Institute is the global institute, not-for-profit entity, which administers the prestigious CFA program, which is considered the gold standard in the investment markets. CFA Institute, through its societies, member societies, which are in more than 160 countries, work towards its mission of raising professional standards, promoting ethical standards, and for the professional development of the markets and its participants. CFA Society Pakistan is one of the active societies across the globe, has won several awards for its contribution on the global level and the activities it has generated in Pakistan. We have engaged in the several activities, and today's event, it reflects just one objective, and that is to promote the capital markets and help and work with students in raising awareness, educating them. And this is a beautiful exercise and activity where we extensively engage academia, students, industry professionals who all work together to promote the investment research competition. The CFA Research Challenge is truly a global competition with more than 90 plus countries participating in it. More than about 7,000 students are part of it. And of course, you can imagine the kind of activity it involves. So each team, just to explain you the process, so each team, so this year in Pakistan, there were about 45 teams registered for the competition. The faculty members working with the student teams in the selection. CFA Society, to begin the competition, arranged a workshop on financial modeling to help the students prepare for the investment research. We had assigned a professional analyst from the industry who was given a framework for a coordinated session with all the teams. And along with that, when these teams have prepared their research reports, they have been graded at by the group of analysts and fund managers who graded those reports. And the top 5 teams today who are participating here. So a big applause to all the teams who have worked really hard in reaching here, contributing towards the competition. And before we move to the announcement and selection of the winner by the judges, we take this opportunity to engage with our speakers as well. I will first be requesting Mr. Asif Peer, CEO and MD Systems, to come here and share his thoughts on these occasions. And I must appreciate both the guest of honor and chief guest for being here, as your participation means a lot for these university students and for the CFA Society Pakistan. Asif Saab, kindly join us at this stage. Thank you.
Assalamu alaikum and good afternoon, everyone. So first of all, thank you CFA Society for arranging such a wonderful competition and creating this ecosystem where undergrad programs in the universities, I came to know that about 38 odd universities have participated in this program, and about 45 teams have participated in this. So 5 of you guys who have presented today, it's an accomplishment, so I just want to give a big round of applause to all of you. Great job by all of these 5 companies. It's not about who is winner and loser or who is runner-up and who is first, second, but I think it's shown that you are the top 10% of Pakistan, and then you guys should be proud of that achievement itself, right? So. And I think the quality of research report that you guys have written at this level, it is commendable. So I think I would really admire and grateful for the Institute, of course, for CFA to arranging this and making sure that creating an environment where people are like open to learn and get this feedback from the mentors and from the CFA Society. And I think having Akif Saab here, as CCP chairman, here at this event, you can see the importance, what kind of young leadership that what everyone's appreciate, and what the CFA Society, of course, the president and past president and Shoaib Saab and all of these judges who have tirelessly worked towards this program. So I think I would like to highlight one thing. This is a practical assignment. We are, of course, competing in the global space. We are competing internationally, and you are comparing us with the international players. It shows that you have done your homework and the research that how to measure the benchmark. It shows that you have done your homework and the research that how to measure the benchmark, because I think that's what I would say. Unfortunately, that we don't have an IT ecosystem where there are tens of systems limited exist, which we want to make sure that we have the global scale of IT services and IT products and IT innovation companies out, because that's a growth area. That's disrupting everything. Everywhere wherever I go, rethink everything. So in today's world, you have to rethink everything. Whatever you do, you have been challenged, right? Every individual education is being challenged. Research is being challenged. Our software industry, our developers are being challenged. It's not just AI, it's everyone is asking how can the productivity will be increased by the AI, right? And that's what we all need to, and at your age, I think mostly, it's very critical that you understand that it is pivotal. Whatever you are studying, whatever you are doing, if you are not leveraging the technology at your best advantage, I think it won't work anymore. So this is like, it's like I would say AI or die, right? So that's kind of a sentiment is what I carry, and this is what I tell my team as well, that this is what the time is to disrupt and change and create a lot of opportunities for us. And Pakistan is well poised for IT industry, IT sector, because we have the youth and the talent, young talent available. We just need to show them the path. We just need to mentor and train them in every aspect of the life, and especially in AI and technology, outsourcing, whether it's a financial outsourcing, even if a CFA, like whatever the work you guys do here, I think that is also an outsourceable commodity. Finance and accounting, we have already seen. It's not just IT as you just need to code and do the development. Pakistan is well poised for everything because of the availability of the skill set and the talent. And one important point, I would say that we always start with quality, and I would say customer obsession, not the customer centricity. Customer obsession, quality, and price point. I think that is one important point I was hearing as well. Like, it is absolutely important we need to understand our brand as a country. Very important to understand. Where do we, if you don't understand your strength, weaknesses as a company or as a country, then of course you will not be able to compete in the global space. So if we just say that we will price ourselves with the other neighboring countries, we will not be successful. Even though we can say we have a better quality price, because you need to understand the brand. So brand is very important, and the country's brand is very important, and we need to all make sure, including all of us as leaders and all of you as youth, to make sure we promote Pakistan brand. And that's what is very important and critical. That is our passion. Wherever I go, it's not systems. I think we represent Pakistan. We represent Pakistan brand. Our passion and deep purpose, today whatever you can drive, mission, vision, it's fine, but deep purpose is that we really want to create jobs here. And that's what only factor that motivates me and wake me up in the morning. How many jobs we can create in Pakistan, how many jobs we can create, and how much we can create a brand equity that we can get an export business. We compete with global players, eye to eye, head to head, and make sure that we win in this ecosystem. So I think with this passion that we carry, and I think we all need, of course, all of you, the society, CFA society, and all of the young generation, to make sure they come and join these things and make sure we make Pakistan proud, because at the end we represent Pakistan at a global stage, and our purpose is to make Pakistan win. So that's what we are trying, and we will keep trying. And I think great job. I would like to just again thank everyone for being participating, CFA to arranging, judges to be here, and I think Chairman Saab to be here, and this is great to grace this occasion. So I think just enjoy whatever the result comes, but I think you guys have done a great job, so you guys should be proud of that. Thank you.
Thank you, Asif Saab. It was really a short but quite an impactful and inspirational thoughts that you have shared. And certainly deep down, I must say I am working as CIO of an asset management company, but we are also thinking how AI is really going to transform our work, and the kind of productivity we have seen, the ability to get several problems solved within minutes, which earlier used to take several hours, is while inspirational and exciting as well, and at times you really wonder how the profession is really going to change going forward. So it's really an exciting time in terms of how AI is changing, and investment industry is certainly one of those where the applications are enormous. With that, I would request now our chief guest, Mr. Akif Saeed, Chairman, SECP, to kindly join us and share his thoughts. Thank you.
Bismillah ar-Rahman ar-Rahim. President, CFA Society, Muhammad Asif Peer, MD, CEO, Systems Limited, distinguished guests, ladies and gentlemen, Assalamu alaikum. I'm glad to be part of this gathering which has brought together the academia and the capital market. Must appreciate CFA Society for successfully hosting this Research Challenge 2024. The quality of the presentation, even though I was only able to see the last two, was very commendable. I believe same holds true for the earlier three also. So it's a tough call for the judges to make. But for me, as a capital market regulator, apart from a challenge, I see it is of the research challenge that is, I see an opportunity, students being introduced to the capital market, and some of them may pursue as a career, taking this challenge more seriously and pursuing as a career, as a professional in the capital market, or if nothing else, as an investor in the capital market. So I've always emphasized the development of diverse financial products and promotion of investor participation and fostering of governance excellence are essential for building sustainable capital markets. The SECP fully supports initiatives that foster competition and ethical decision making across regulated sector. It's inspiring to witness CFA going through dedication to maturing future professionals. I would like to take this opportunity to highlight some crucial areas that young students and charter holders must focus on in order to succeed and contribute to the growth of capital market. One of the most pressing challenge we face is the lack of diversity and innovation in financial products. Expanding and diversifying investment instruments is not only essential for the growth of market, but also crucial for attracting a wider and more varied investor base. I would therefore encourage professionals to be more innovative in research, as well as facilitate product development so more individuals will be attracted towards capital market. This will bring greater dynamism and deep depth to the market, enabling it to withstand the challenges of ever-changing global landscape. A critical challenge facing Pakistan's capital market is the shortage of skilled investment professionals. And it includes regulator also. Addressing this gap is essential to improving market efficiency. By investing in education and training, we can cultivate a new generation of professionals equipped to drive market growth. Corporate leadership plays a pivotal role in mentoring and supporting young talent. And Mr. Asif Peer, who is leading Systems Limited, a successful listed company, serves as an exemplary mentor for the students present today. I hope that more successful companies will follow his lead in guiding the next wave of professionals. At SECP, we are dedicated in diversifying our teams across various divisions and fostering an environment that supports continuous growth and development. SECP has introduced policies to promote the pursuit of professional qualification, including CFA certification. In collaboration with CFA Pakistan, SECP offers 50 scholarships annually to its officers, and CFA charter holders are encouraged to join our graduate training program. Currently, 11 SECP employees hold CFA charter. 19 officers are at various stages of pursuing CFA qualification. We are also working with other professional institutions on capacity building initiatives to upskill both our officers and those in regulated sectors. I cannot emphasize enough on the importance of learning and adopting to data-driven decision-making and policy development. A key recent development in this regard is the establishment of a data science and research department at SECP. Formed in September 24, its primary goal is to enhance data management by setting up a data warehouse, facilitating centralized data handling and enabling us of advanced analytics. Additionally, the department will collaborate with research projects with other domestic and international organizations as well as academic institutions. Globally, capital markets and academia do play a critical role. One provides the data, other provides the research. I think this is where we are lacking as a country, and we are working with other institutions to bridge this gap. I think this department will provide a base in terms of enabling the academia to access the data and the students to, and the faculty to conduct the research in different areas in the capital market. The global focus on sustainability is growing at a very fast pace in Pakistan. The awareness on opportunities around sustainable finance and climate change risks has increased. However, integrating ESG factors into investment practices is still a very early stage. More collaborative efforts are needed to boost sustainability-linked investment. Significant progress has, however, been made with the issuance of ESG disclosure guidelines in 2024 and the assignment of overall responsibility to boards and other code of corporate governance. I appreciate CFA Pakistan's support of SECP's advocacy and capacity building efforts over the past 2 years. Furthermore, in order to highlight the sustainability performance of companies and showcase their success stories, SCCP launched a ESG Sustain portal, which will play a critical role in driving sustainability-linked investments. I strongly encourage both faculty members who are present here, capital market professionals, even students, to visit ESG Sustain so that they can see how the companies are responding to the challenges and what sort of action they have taken. Since its launch in December 24, more than 50 companies have been onboarded on ESG Sustain, providing valuable sustainability and gender data. We are actively engaging with more companies across regulated sector to ensure broader participation. I encourage once again the students to keep a keen eye on these local and global developments, and we welcome feedback from all stakeholders to enhance portal's effectiveness and maximize its impact. SCCP continues to prioritize enhancing market transparency and regulatory consistency with clear regulatory frameworks and transparent financial reporting and ethical practices being essential to foster investor confidence. Collaboration with stakeholders is one of the key focus in developing policies and addresses these challenges effectively. Additionally, technological disruptions and cybersecurity threats are emerging concerns, some touched by both Asif and Asim before me. Embracing technology is one part of it, but at the same time, one needs to be mindful of the risks and the threats which one has to face as we go along. In terms of this particular event and the topic in terms of research, two major developments I'll say that, is the framework which we are working on. One is the corporate briefing, another is the research analyst regulation. We are holding a consultation session. We have already held, we have made the public the concept paper. We held in-person consultation session at the Pakistan Stock Exchange. We are holding a virtual session on the 26th, which I believe is tomorrow. So I think I'll again request the teams to participate, winner or loser, but you will be able to understand what sort of a framework or what the market mindset is when it comes to research analysts. To summarize, professionals who possess deep understanding of the economic landscape and continually upskill in response to emerging trends are crucial for growth and progress of our capital markets. The ongoing collaboration between academia and capital market, as the one facilitated by CFA Society Pakistan, is crucial in fostering a resilient and progressive market in Pakistan. I commend leadership of CFA Pakistan and Mr. Mohammad Asim for providing an excellent platform to inspire and cultivate the next generation of professionals. I would also like to congratulate the winning teams, I don't know which one it is, for their outstanding presentations, and I'm confident that they will continue to excel in their future endeavors. I look forward to seeing the innovative solutions and insights the participants will bring, and I'm certain they will contribute significantly to the futures of the Pakistan's capital market. And best of luck to all of you. Thank you.
Thank you, Akif Saab, for your kind words. I must appreciate and should highlight that one of the reasons CFA Society has been most effective and so active is because of the forthcoming response we receive from the regulators, from the corporate industry and the industry participants. And this is a huge example because this event would not have been possible without the support of the industry professionals who have contributed significant time here. So thank you very much. CFA Society is actively looking to engage with the SCCP and looking forward to play our role in the engaging sessions, consultation sessions that SCCP is planning to hold. We have already contributed our view on certain papers that SCCP floated earlier, and looking forward to do more and continue in the future. Thank you.
We would now like to invite our CFA Society Pakistan board members, Mr. Mohammad Asim, President and Professional Learning Committee of CFA Society Pakistan, Mr. Mohammad Tahir Saeed, Director CFA Society Pakistan, Ms. Sarwat Ehsan, Executive Director, CFA Society Pakistan. And now I would request our esteemed distinguished guest, Mr. Akif Saeed, and Mr. Asim Peer to join them on the stage for the distribution of plaques.
Akif Sahab, we would request to kindly join us on the stage. We want to acknowledge all the participants and the contributors at different stage of the competition. So these included graders, mentors, analysts, fund managers who have generously contributed their time, and of course our judges who have been here since 4 p.m. For this evening to judge the teams.
To begin with recognizing our trainers who guided our candidates on how to go about this competition, we invite Mr. Talha Amir for conducting financial model training. After that, we invite Mr. Muhammad Saad Ali for training on how to write on equity research report. We extend our gratitude to our esteemed industry mentors who have guided the participants throughout this journey. We now invite them on stage for recognition. I would request Mr. Abdul Wahab Maiman to come on stage. Mr. Ali Shah Jamani. Mr. Ali Shah Malik. Mr. Hassan Javed. Mr. Mehroz Khan. Mr. Mohammed Saad. Mr. Mohammed Shahroz. Mr. Nazim Abdul. Mr. P. Mohammed Talha. Mr. Raza Inam. Mr. Anand Kumar. Mr. Sajad Hussain. We now extend our gratitude to our graders. Please, I would like to call Mr. Dilip Kumar. Mr. Faraz Yunus. Ms. Misbah Parvez. Mr. Mohammed Saad Ali. Ms. Muniba Abdullah. And Mr. Yasin Mohammed Hanif. We would now like to call upon the stage our esteemed panel of judges today, starting with Mr. Syed Akbar Ali. Mr. Raza Jaffrey. Ms. Amreen Surani. And Mr. Nayab Babar.
If there's anyone in the room, any of the mentors or the graders, we have not called out the names. If you could raise your hands, we could call you, please. Saad? Yes, please. Okay, so both of you could just come. Yaqub Saab and Saad, please join us.
Mr. Mohammed Yaqub, our mentor. Mr. Waqas Ghani. Yes, I'm in fact.
I can just see our trainers who've just walked in, so may I request Mr. Talha Amir Khan to please join us on stage to receive the award for the trainer. Oh, great. May I request Mr. Saad, who also was a trainer for one of our sessions for the students.
Mr. Ahmed Rauf. I would like to call upon stage Mr. Ahmed Rauf, our mentor. We now move towards the most awaited moment of the evening, the announcement of the results. We begin with the award for best presentation. The team that demonstrated exceptional presentation skills and clarity in their research is, any guesses? The short sellers from LUMS. Congratulations, team short sellers. The runner-up team for this year's CFA Institute Research Challenge is Team Rising Fintellects from IBA. May I please request their faculty and mentors on the stage? Do we have Ms. Noreen Ayaz over here? And Mr. Farhan Rizvi, the mentor of this team? And now, the moment we all have been waiting for. The winning team of the CFA Institute Research Challenge 2025 is... Any guesses? It is the short sellers from LAMS. May I request their mentor and the faculty advisor to join them on the stage? To commemorate the special occasion, we now invite, we have our board of directors on the stage. I now invite our guest of honor, Mr. Asif Peer, for the shield. the board would also present a memento to our chief guest, Mr. Akif Said.
Thank you, everyone. Thank you to our guests and participants and our chief guest and guest of honor and the board of CFA Society Pakistan, and where the dinner is now served. Thank you.
I request all the mentors and faculty members to collect their gifts and graders as well from on behalf of CFA Society Pakistan.